Good afternoon. I would like to welcome you to Šiaulių bankas meeting with investors. I'm Emilia from Nasdaq Vilnius, and I'm delighted to be the moderator for today's event. We will start with a presentation from the management, which will be followed by the Q&A session. As always, I encourage every one of you to ask questions during or after the presentation in the question box of your screen. With that said, I am pleased to introduce today's presenters, the Chief Executive Officer, Vytautas Sinius, and the Chief Financial Officer, Donatas Savickas. Gentlemen, please, the floor is yours.
Dear investors, dear colleagues, I hope everybody safe and sound to this summer afternoon, and welcome everyone to the Šiaulių bankas webinar. And it's a pleasure to be with you and to share some insights about Šiaulių bankas results after the second quarter. So let's get started from the slide number 3. The highlights of the first half of 2021. So you see figures, I would say rather good performance of bank group during the last 2 quarters, with result of close to 28 million euros of unaudited net profit, and that we have 34% more than a year ago for the same period. And the second quarter generated 15.5 million from that result, and with increase of 24%. So the key drivers of results, this growing volumes of business and private clients lending, so it's picking up, and we have a good trajectory of that. There is a positive influence, and quite significant, from lower provisions compared to the 2020, the same period, and several impacts of one-off that also had a positive effect, mainly from foreclosure of some historically problematic assets. And overall results, I would say, pretty happy with the performance of that. And that also reflects to our key performance indicators and comparison with the target levels. Actually, in all of them, we have results above the targets. Especially, I'm happy with the return on equity. We came back to the level of 15% plus, while our target was 12.2. Also, from the efficiency point of view, we're working pretty efficiently from a cost-to-income perspective. So our result is slightly above 40%. If we would include impact from asset draudimas asset under unit-linked contracts, that would be about 42%. So again, we are better than our estimate for 21, end of 21. Capital adequacy ratio, again solid at the level of 18.5%. And one of the drivers of net profit result compared to 2020 is the lower cost of risk ratio that stands at the level of 0.2, while the projection was 0.6. And the other thing worth mentioning is the asset quality and strong capital base has been confirmed by AQR and stress test results. So that's officially were announced rather recently. So we're happy with this exercise, and already mentioned in our previous discussions that we were waiting for that closure of this process. So that has been officially closed recently, and we can now move forward with our further supervision by European Central Bank after this exercise. So talking about macro and COVID situation, we already have more information in this period with living with pandemic. So again, I would say Lithuania shows quite stable and systemic growth compared with Eurozone and European Union. Slightly lower volatility compared with the peers, like European peers, and that also gives better climate, I would say, in Lithuania for business investment and consumer confidence. Despite that the growth is lower for the second quarter compared to the EU and Eurozone, we know that the base of comparison with 2020 is much better for Lithuania than the EU and Eurozone. And comparing with the Baltic states, Lithuania growth rate is better than Latvia, and comparing with Estonia from 2020, in general, the same level. Talking about inflation, I would say that it's mainly pushed by the post-pandemic increase in demand, almost in all segments, like raw materials, electricity, or services. But the growth in prices we expect should be temporary, and once this excessive demand goes down, that pressure of prices should also diminish. Jumping to the situation on the COVID-19, I would say Lithuania is also moving in more or less the same trajectories compared to the whole Europe. So currently we're enjoying relatively lower figures compared with the whole Europe. Of course, the situation is very dynamic, and it's still very hard to predict how it will end up at the end of this year. Nevertheless, the 50% of population is already have immunity, and let's see how it will develop further. And the government is strongly recommend continue this process, and hopefully that will be managed successfully in the coming period. From a branch perspective, we are again fully opened. I would say we just after COVID impact reduced branch numbers by 2. So now we opened 57 branches and fully operating in all of them and accepting clients as usual. So let's move to the loan portfolio dynamics and structure of different type of lending. So let's start with the overall overview. So we have 8% growth during the first half. So let's say we're relatively after the bumpy quarters in the last period, we are back on a growth path. We have a nice trajectory of last 3 quarters with a rather stable margin, and that stands at the level of 4.4%. Despite rather intensive competition, we are able to keep the margin rather flat, and that's a good thing. What else? We have strong performance of new agreements. So as you can see on the graph, that we have records new agreements signed during the last 6 quarters with rather stable repayment rate, and that the reason probably could be that more predictability, less uncertainty, and less state aid with the financing reflects our successful generation of new agreements. And as we mentioned in our previous discussions, that the pipeline is building successfully at Šiaulių bankas. So the trend continues in the last quarters, and the second quarter was, I would say, especially successful in that respect. And that led also to continuous growth of our market share. So if we would look at the end of the first quarter, because that's the market data we are having currently to compare ourselves with the market. So we have the growth of approximately 1 percentage point up to 8.6% if in overall loan market. So we can move on now to a more detailed description of corporate financing development. So as previous slide showed, the lion's share comes from the corporate financing, and the new agreements were rather high in the corporate financing portfolio too, at the 203 million level, and that moved our portfolio up to 1.1 billion of euros, and that new agreement generation was 3 times compared to the same period of 2020, the second quarter. And that's natural because that period was the most intense in terms of COVID pandemic disclosure at that time. And we see that after 1 year, the performance obviously changed quite drastically compared to that period. So the portfolio grew 36 million euros during the second quarter and 66 million from the beginning of the year. And also worth mentioning that the most loans that were restructured or deferred due to the COVID-19, the period of this deferral expired, and clients coming back, successfully to the normal repayment schedules. And I would say that this cliff effect has not been observed so far, and the performance of portfolio is rather stable. And again, talking about market share, comparing with a market that has decreased by 15% over the last 12 months, Šiaulių bankas decrease was minimum, and due to that, our market share in the period has increased by 1.4% up to 13.8% of market share. So our core business is performing well. We are pretty confident being a strong player in corporate financing, and so far situation is developing favorably for Šiaulių bankas. We can move to the more private individual business lending segment, the mortgages and consumer financing. Bank becomes more and more significant player in a house lending market, and we have another record quarter with a new quantity of agreements and volumes. So that's a successful use of the current trend in the market, that the market is really active, and we are benefiting from that. So I would say, again, proud and happy that we caught the momentum to enter actively to this market. And what is also worth mentioning, that currently we are generating from the new agreement perspective 20% market share. So we became, despite that our market share is less than 4% of the portfolio, but current mortgage loan generation is standing at the 20% level, and that's continues for already several months in 2021. And it seems that this level is pretty decent for Šiaulių bankas from the brand perception and from our branch network coverage. So we feel quite comfortable in this business segment and competing with other peers in this business. Beside that, we can say that the market, the interest rate, again, rather flat, despite the competition is quite strong in this business segment. And we're still able to keep at least 10 basis points higher interest rate than the average in the market. Well, so also just few things were mentioned about the mortgages, that we are continuing to innovate and invest into this business area. We've just recently launched our cooperation with the partners regarding real estate insurance that is proposed as a package proposition for the clients when they are borrowing money at Šiaulių bankas for acquisition of a house. As well as we are recently launched our combined life insurance proposition with our subsidiary SB Draudimas, which is a life insurance company. And again, the new propositions for the clients will allow them at one stop to acquire quite related needs, covering products like mortgage, and also to ensure their life against some risks that are important for this decisions in their lives. So hopefully that would also allow us to expand our cross-selling to the private individual clients. Okay, so let's move on to the consumer financing. So less restrictions on customer services and physical faces allowed us to provide more consumer credits, and that also reflects in our newly signed agreements, and we reached again the best result in the last 6 months. So the period was quite difficult, and it was not easy to work in the consumer financing business during this pandemic period, but it seems that we are picking up, and volumes are increasing, as I mentioned, due to the reasons that more physical faces opened, and our activity on electronic channel sales also continues. So we see quite positively the next period of consumer financing. And again, as in other areas, our market share continues to grow. Of course, this change is quite marginal by 0.3 percentage points, but it came up to 11.7% at the beginning of the second quarter. Okay, and daily banking slides. So we have from net fee and commission income increased by 10% to 8.4 million compared to the same period of 2020. And I would say it's rather stable situation with fee income development, slightly better than in our forecast. But of course, the pandemic influenced some of the businesses, and you see in the chart changes compared to the same period of 2020. So we have in some areas like payments, like loan administration and account administrations, some slight increase. In cash operations, there is some decline by 4%, and that's natural because still cash operations were partly restricted in the beginning of this year due to the closure of some branches, and of course less activity related with the cash. But the positive surprise for us was good performance of securities brokerage, and that type of income has grown by 76% during the comparable periods, and we see really good and positive development of this business area that strongly compensates some areas that has declined. And surely our investments into the electronic channels are also recognized by the clients, and more of them are using our both application and internet bank, and the growth during the first half of the year was 5%. So at this time, I would like to transfer my word to continue for Donatas Savickas, CFO. So Donatas, please.
Good afternoon, ladies and gentlemen. It's already tradition to meet not in person but in these webinars each quarter, and to have chance to present and comment the results of Šiaulių bankas. And all these quarters we have to be proud of some or one or another aspect of these results. Talking about funding, the graph of main source of funding deposits, you see the dynamic is, I would say, it's stable, despite the fact that since the beginning of this year we have increase of 6%, and during the last quarter we have slight decline in 1.5%. In current situation, we see it as a positive sign. Why? Reason for that is that we live in the environment when funding is not a, how to say, limiting factor anymore, and we try to make our loan to deposit ratio increasing, and we managed to do so in this year by increasing loan to deposit ratio up to 77%, and therefore it's not a question how to raise funding, it's a question how to manage funding, and we are happy that we were able to manage this active growth of deposits, where we see our peers, competitors and colleagues, some of them, they are struggling with that management, and it affects their profitability and net interest margin. And these steps that we made was the decrease of term deposit interest rates for retail depositors, charging interest for large balances in corporate customer accounts. And all these measures help us to keep the balances under control and to drive the cost of funding down to 0.27%, and that helps us to maintain good net interest margin. And currently we have diverse base of available funding sources, including local market, raising platform in 6 EU countries, bilateral facilities from financial institutions. And we are not using them, but it's good and safe to have them in the pocket, available funding. And in addition, as you may know, we have plans to issue senior preferred bonds this year under MREL requirement. And this MREL requirement is set targets for the period up to January 2024. And in order to achieve these targets, we are planning to raise up to 250 million euros in senior preferred bonds. And first tranche of that program we are planning to do by the end of this year. It should be mentioned that we already met requirements of MREL subordination already, including interim targets and final target for the January 2024. So it would be obviously active second half of year in terms of raising this bond issue, which we announced about this program in our notification through Nasdaq Stock Exchange on 15th of June this year. We can move further on this and capital and risk management slide. I have several main messages, and one of them is I would say that we went through the comprehensive assessment exercise in the last more than 1 year, because it started in 2020, and due to the COVID-19 crisis, it was stopped and renewed in the August last year. And it was time consuming, and we had to dedicate our staff forces to make this happen. And the final result satisfies us, because we say that this exam is passed. And this graph on the left side on the slide shows two, obviously, main parameters. One is how our CET1 ratio was affected. It decreased by 2.2%, but it's natural when we compare with the peers who went this exercise as well. So we see very similar figures. And another part of this was stress test, and ECB took stress test scenario according to the local regulator scenario, and Lithuania scenario was the strictest, most strict of all European countries. And even under this very severe scenario, we passed this stress test, and our cap CET ratio stays above this minimum required level. Now, when it's over, we can, I want to say, come back more to normal business, and it's probably a quality sign for our investors that investment in Šiaulių bankas is safe. Another news related with capital is the lift of restriction on dividends that ECB imposed when this COVID crisis began. And this recommendation on dividends expired by the end of September this year. But of course, in Lithuania, we cannot pay interim dividends, and probably its question will become actual in the beginning of next year, and probably the second half of this year will be topic for consideration in the management bodies of Šiaulių bankas about what would be sound and prudent level of dividends what we can offer to our investors. Of course, our plans should be adjusted with regulator ECB, and knowing their approach, it will be quite a negotiation on that probably. The level of capital is, as we stated in our earlier presentation, it remains sufficient. It decreases slightly, but the main reason for that is the bank portfolio increase that affect our profitability positively. Yes, we can turn another page about loan portfolio quality. As Vytautas already mentioned, we see no signs of deterioration of loan portfolio quality, and the level of NPE, non-performing exposures, that increased in fourth quarter last year, and that increase was mainly caused by a comprehensive assessment prudential recommendation coming back to the previous level. And in the last quarter, in absolute figures, we had a decrease of NPE in 10 million euros. And this decrease was mainly caused by repayment of some NPE. When we reclassified some exposures to NPE according to the recommendations, of course we started to, how to say, talk more strictly and demanding with these borrowers, and they, how to say, show that they are able to repay all loan. So we have good trend in NPEs, but about profitability for that reason. So we had to find new customers that, how to say, replace this so-called bad exposure. And cost of risk, last year we have 0.6%, for 6 months of this year level is 0.2, and we see no sign of, how to say, deterioration, but situation in the environment is very, how to say, nervous, and obviously nobody can exclude that this trend could change, but it would be macro changes, probably not local or related with the portfolio of particularly Šiaulių bankas. Yes, please, we can move on next and probably the last slide of this presentation before Q&A. And I have several messages here commenting this data that is included in that slide. One, first message is that finally price to book value ratio is above 1. So that means that investors trust in sustainability of bank results, as we do. And another message is that share price reach or is approaching to the level that analysts covering Šiaulių bankas predicted after we announced first quarter results. And so that means that they are forward looking, and we are, how to say, what we are planning and we are delivering. Another news that I would like to comment, that number of shareholders, you see the number is increasing, and we see very many active local and international investors joining to the shareholders of Šiaulių bankas, and it should be mentioned that among these investors we see a lot of retail investors from Estonia, and we are happy with that trend, and think that Lithuanian local investors will follow this trend as well. Thank you for that, and I will be answer questions if they be according to my know-how.
Thank you very much for the presentation. Now we will proceed with the questions, and before that I would like to remind every one of you that you can send in your questions in the question box of your screen. So let's begin. The first question is as following. Key performance indicators are above the target set for 2021. Will targets be reviewed and the new guidance provided? Thank you.
Yes, thank you for the question. And as I mentioned at the beginning, so correct, there is a performance above our target levels. However, in our recent discussions that we in the management board, we haven't made any official changes to the targets and to our budgets, because the year is not ended and still the situation is not kind of 100% clear how it will develop further in the next half of the year. However, as of now, we see positive signs that the results could be better than our initial targets. And if we talk about return on equity, so I would guess that current situation shows that it could be closer to the figures that we reached at the end of first half than the initial target, meaning closer to 15% than 12.2 as our target. Cost of income, I would say also, despite that the pressure for the cost exists, and we so far tackling with that successfully. However, probably 40% would be hard to keep for the whole year, but nevertheless, we will do our best to be below our initial target of 44.7. And cost of risk, I would say, again, that's very much would be dependent on the client's performance during the next half of the year. But my view on that would be that so far situation looked pretty strong, and that reflected on our first half results. And I would expect that at least current situation doesn't show clear signs of a need of major provisioning in the nearest future. But as I said, the situation is still not resolved, and things could change, so we need to be still cautious, projecting optimistically the old positions. But I would say I'm now much more confident talking about pretty good results compared to our target setting period, and the first half shows that positive trajectory.
Thank you very much for your answer. Another question would be as following. Tensions between European Union and Belarus are increasing. How the Belarus risk and sanctions could affect bank's operation? Thank you.
Yeah, that's a quite broad question. So I probably could touch a few angles of that. So definitely situation is important for Lithuania, how it develops. Of course, it's currently much more important on a political level than the economical, because the influence so far economically is rather marginal. And so far we have not seen any major influences due to this tension at the border and politically with that country. From the bank's perspective, what we mainly focus is the clear compliance with the all sanctions imposed on Belarus from European Union and other related institutions. Therefore, this is the new practice of industry-related sanctions. So that's one of the issues that not only Šiaulių bankas but all banks that are close to Belarus and where transactions with that country happens. We focused on that field from the anti-money laundering perspective and all the sanction related perspective to comply with that. Another angle is the credit quality assessments. So our clients are very low exposed to the Belarusian risk. We have just a few clients that have some closer relations from the business perspective with Belarus, and we did our work to evaluate that closely and to even stress test the situation with those clients. And even in the worst case scenarios, we see that the potential provisions on those exposures are very minimum, very marginal. So far, I would say situation does not show any critical signs. Of course, we need to see how this intensive periods of the migrants will be resolved and how it will develop, and then we can see. But so far, I would say no major influences, neither economically nor from the bank's perspective we record.
Thank you very much for your comment. Another question that we received is as following. As European Central Bank revoked its recommendation on dividend distributions, could you please elaborate more on dividend distribution for the shareholders, please? Thank you.
Okay. Yeah, talking on the dividend topic, we definitely could say that the sky becomes a bit more better and clear in that respect. So less market and Šiaulių bankas related obstacles exist, and uncertainties are lowering, or they're becoming resolved. So the last information from European central banks also opens up a bit more opportunities for banks to be more liberal with the dividends. So definitely we'll consider that. Probably it's not still the right moment to discuss more on that, because as I mentioned, the year is just halfway, and we need to see how it will end up and how situation will look like at the very end of the year, when we would expect more discussions in our management boards on all parts of this game. So we would need to see how our markets, how our growth of loan portfolio would look like, because current trend shows good recovery and pretty strong growth both on a corporate and on private clients. Also, we need to evaluate the capital buffers and related things with a sufficient capital adequacy ratio. So far, we see sufficient level for some extra dividends, but of course, I would just say that the situation today looks a bit more positive and more certain than half year or 1 year ago. Therefore, we could expect following our dividend policy to consider some payments in the beginning of 2022. But what would be an indication? It's a bit too early to say.
Thank you very much. Another question that we received is as following. While looking to the second quarter results, the profit figure was boosted by one-off gain from the sale of some tangible assets. Could you explain this one-off gain, please?
Okay, I will take that. We expected that question, and the comment would be as follows: that in second quarter of this year, the investment property held in one of bank subsidiaries was sold, and the difference between net value of that property and the proceeds from that sale was recognized in gain from disposal of tangible assets line in profit and loss statement. It should be noted, however, that in the fourth quarter of last year, allowances for impairment losses were made for that assets, and these impairments were made according recommendations provided by comprehensive assessment exercise. And according accounting standards, when we sold these assets, these provisions, what we made in the last year, remain in that provision line, and the result from the net value, as I said, stays in this other income line. That means that both these provision figures were increased, and the result from that one-off was also increased. creating some impression that it was very significant. It was significant, and that shows that we were able to get more than even we invested, but this accounting specific does not allow to see the how to say real figure, and which is not so impressive, I would say. Thanks.
Thank you very much for your answer. And could you please comment on how many corporate clients and how many people you have as a clients? Thank you.
That's quite specific question. I could answer just very generally because I don't have those figures exactly at my hands. But if I recall correctly, so from private clients, we have more than 300,000 clients, from which we treat that more than half as an active clients. And from the business client side, we have more than 25,000 clients which are treated as business clients.
Thank you very much. We have received several more questions, and the next one is as following. What do you think has caused a rapid increase in the number of shareholders? Thank you.
As I mentioned earlier, commenting this dynamic of number of shareholders increase, we see retailers from Estonia is obviously very active, and that could be one of the reasons of such performance is probably they see valuation of Estonian banks, and when they compare with Šiaulių bankas, that shows very similar financial results, but the valuation levels are different, and probably they predict that the similar trend could happen not only in Estonia but in other countries as well. Probably that explains their activity, which this pattern is followed by other investors in Lithuania as well, as I also mentioned.
Thank you very much. And could you please comment on what was the risk-weighted assets at the end of Q2, please?
Okay, that mine again. It should be noted that risk-weighted assets are in annex of this presentation that is announced through the NASDAQ. But in order to save time, I could say that it's 2 billion euros. But I should stress that it's preliminary, both risk-weighted assets and also capital adequacy ratio, because at the moment of when we announce the results and comment them, we have no final confirmation from regulator. So, and when we receive this one, we public final capital ratio figures and risk-weighted assets figures in our website. So please consider that when you make your decisions.
Thank you very much. Another question that we received is as following. Can you please explain how Šiaulių bankas plans to raise its return on equity and lower its capital? Thank you.
Yeah, if I understand the question correctly, so when we talk about return on equity improvements or continuous growth of this ratio compared to the to our projections of 12.2%, so where I do see potential, so mainly it comes from potentially lower provisions that were projected. So that's also the first half of the year results shows that. The second element is related with the top line development. So if we would, on a good track record on our loan portfolio growth, we see possibility that new income generation could also influence positively return on equity ratio. And how the question also was about how lower its capital. So, you know, one of the things we already discussed, the possibility of some dividend payouts that would reduce the capital base. And that's the third element that would also could impact return on equity, but from the other side, I would say, of the ratio. So that would be my considerations.
Thank you very much. As we have the last question remaining, I would like to remind everyone of the listeners that you can send in your questions in the question box of your screen. With that said, let me continue with the next question, which is as following. There is a new banking market player in Lithuania, Revolut Internet Bank. How do you see this may impact banking market in Lithuania in general and Šiaulių bankas in particularly? Is there anything Šiaulių bankas can learn from this fast-growing fintech company like Revolut? Thank you.
It's yeah, really very good question and the broad one. Yeah, probably it's worth to reflect and you know, have a broader discussion, and this is the potentially question that could be answered in many thoughts and many considerations, but not expanding too much. I would say that you know, each bank in Lithuania tries to you know, express their business model and to be unique and specific. So both Revolut and Šiaulių bankas have many differences and many different propositions for the clients. And being a fully internet bank, it comes with a lot of different benefits, but also with some difficulties for some clients. So in some areas we are, I would say, providing through our branch network and internet channels much, you know, broader coverage of the services that we can provide and service quality to provide for those clients that need for that. But generally talking about the fintech development, it's definitely key driver of innovation and experimentation. And we as a bank closely monitor what's happening in the market and how it could adopt and fit to our market strategy and to add on some elements that we already have as our strengths. Our view is that by this close monitoring of the markets and fintech development, we're trying to catch the core trends and features in the newly developed services or newly developed channels, and to consider how it could fit to our propositions to our clients. So that also includes in our application, in our internet bank, all those examples and all those developments of the peers in Lithuania and outside. That's you know, our field of information that we're using, considering what is important for our clients. So this game is very interesting and the market is dynamic. So we definitely see that all this brings the benefit for the clients, both for Šiaulių bankas clients and for those who are keen to use only internet banks. Thank you.
Thank you very much. And as all the questions are answered, thank you everyone for being here with us today. The recording of the presentation and the Q&A session will be available in the Nasdaq Baltic YouTube channel. Dear management, thank you for the presentation and a very interesting Q&A session. Have a good evening, everyone, and goodbye.